Hello there. This is James, and you're watching OneRoyal, and it's live. In today's program, I want to talk or ask the question as a little bit of economic data coming out of the United States, given the market a much needed adrenaline boost. As well as that, I want to discuss the fact that we have indeed now got a full-blown global trade war, and Canada has a look at interest rates. But before we get into all of that, don't forget these little videos are for educational purposes only, and in no way whatsoever should they be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. With that out the way, let's get started. So, indeed, I asked the question, has the latest inflation reading from the United States given the market the much needed medicine is needed? Because what's happened is that the US CPI has been announced year on year at 2.8%. versus 2.9% expected. Now, the previous reading was indeed 3%. That's when the markets started getting a little concerned because we started seeing a slowly uptick in inflation. But, of course, this reading of 2.8 versus 2.9 is a lot better than anticipated. Okay. In fact, if you look at all the inflation numbers across the board, they were lower today. You had obviously core CPI year on year 3.1, core CPI month on month 0.2, CPI month on month 0.2. So, is this the thing the market needed? Well, in some ways it is. And we'll look at the market as well. But I think this little bit of rejoicing, is going to be a little bit short-lived. But we'll talk about that and have a look at that in a minute. But why is the market taking this reading as a small little for a change? Because it needs it for a little bit of positivity for a change. Well, of course, now people are speculating because the number is coming down. This may indeed, in fact, encourage the Fed to indeed cut interest rates come May, which of course will hopefully give the market a little bit of a boost. Because when you cut rates, it's cheaper for people to borrow. It's cheaper for businesses to borrow and to invest. So, well, anyway, let's have a quick look at the market because at the moment there was a teeny weeny bit. I think it's a little bit of rejoicing, but like I say, for now, I think it's potentially maybe only a little bit short-lived. But anyway, let's get on and have a look at the market. So first of all, let's look at the S&P. Okay, this is on a 30-minute chart. All right, 30 minutes. Okay, if we look at it daily, we can give ourselves a bigger picture of how it opened. Okay, like I say, as you can see, it did indeed open with a gap, a slight gap. Okay. It wasn't like revolutionaries, like that's it. All our concerns are over. We don't need to worry about anything. All life is good. No, it opened with a small gap, giving it a little bit of a lift. Same, you can see that again with the Nasdaq as well. Again, opened here. Look, so open higher with a gap, but since then it's still trading just above yesterday's open. So it's not huge. Like massive relief. It just gave it a small relief initially. I mean, if we have a look at some of the other things, let's have a look at gold, for example. It gave gold a bit of a boost. Surprisingly, we should generally be the opposite because gold can sometimes use as a hedge against inflation. But obviously, no, the gold bugs are still there and gold was trading on the day slightly higher. Let's have a quick look at the euro dollar because the euro, of course, has been experiencing a 4-month high against the greenback. Okay, for the day, not a massive change. If you look at the 30 minutes when it came out, though, the CPI result, you can see, okay, there was a spike higher and then a spike lower. So again, it dampened a little bit, but not a massive change. We're not seeing massive dollar strength on the back of this either. So again, teeny weeny bit of relief, but not a lot. And what is the reason for that? Well, even though, yeah, this is a bit of a good news, because the market was worried, very worried about that dreaded word stagflation. And this has obviously given it a little bit of calm, because of maybe we won't face stagflation, but there's no hiding away from the T word. There is no way of hiding from it. No matter how much we would like to hide from it. And trust me, I'm pretty tired about talking about it, but that's all I seem to be talking about. That's all the market seems to be talking about. There's no way of hiding from it, because today, don't forget, it's the start of 25% tariffs on steel and aluminium on all countries. On all countries. Not just Canada, Mexico, or China, which has been in the headlines, on all countries, which means it's now officially a global trade war. And the EU, they're not sitting back on this. They're not taking it. They've come back with their own set of tariffs. Now, the EU have responded by putting tariffs on $28 billion on US goods from April the 2nd. These will include the likes of jeans, alcohol from the United States, Harley Davidsons, and bits and pieces like that. So they're going to put tariffs on $28 billion worth of US goods coming in. So what we have here now is, like I said before, practically a full-scale global trade war, because no longer was it just in the North America and then out of Asia. It's now spread across the Atlantic. Because if we look at it, of course, now we have obviously US versus Canada, Mexico, China, and now the EU. So we are looking at a full-scale global trade war. And what does Trump think about the market and the market's handling it? Because the market's not handling this very well, is it? It's pretty spooked. Well, apparently, he doesn't care. He doesn't care about the implications to the market at the moment. In fact, he says markets are going to go up, they're going to go down. But you know what? We have to rebuild our country. Now, yeah, we all know markets do go up and markets do indeed go down. But when you're encouraging concern and worries, because the markets never lie. Here's the thing. That's why I always say, if it's a good idea, the markets will tell you. If it's a bad idea, the markets will tell you. And this is one thing, you need to understand. The markets is gauged, because the markets aren't looking at the now. They're not. They're looking at implications of what is done, okay, and what the implications are for 7 weeks, 7 months, a year, 2 years in the future. And they are telling you what they think the implications of it are. The markets don't lie. And because there's so much uncertainty, it's like watching an episode of Friends. They all remember the old US TV series with Ross and Rachel. Will they, won't they get together? It's like that, because it's ever-changing policy. Will he go through with it? Will he back down in it? This is what, creates so much uncertainty in the markets as well. I mean, if you look at it, just yesterday, Trump ordered 50% tariffs on Canada as a retaliation for Ontario increasing tariffs on electricity supplied. 8 hours later, it was reversed. It was stopped. It was reversed. 8 hours later. So, like I say, it's like watching an episode of Friends in some way. But here's the problem. The tariff war is a real threat. It really is. So, and I think everybody is looking into it or looking at it in that way because, for example, Goldman, their forecast for the year target for the S&P is now lowered to 6,200. It's still below that at the moment. They obviously expect some sort of bounce, but it's lower than their previous forecast of 6,500 points. At the same time, they've also downgraded their forecast for the US GDP in 2025. They put it down to 1.7% from 2.2%, which is quite a big drop off. So anyway, let's we'll have a look at the Mag 7 because they've been suffering. So a quick look at the Mag 7 now, actually, and see how they're at. See if they've benefited from the bit of CPI boost today. Because I think everybody was up a little higher today, which is not, it's not surprising after the bloodbath we've been witnessing over the last couple of trading sessions. Tesla, I did a video on Tesla yesterday. By all means, if you missed it, go back and check it out because we had a great conversation about Tesla. As you can see, though, it's open with quite an impressive gap. Still falling down a little bit from the open. But again, it closed, where did it close? Closed at 229. We opened around 246 levels. So that was, again, a nice little boost. But that wasn't because of CPI. That happened before the CPI in anticipation of it. Meta, again, Mag 7 opened with a boost, slightly down again now. Because I say the rejoicing is diminished. Microsoft, again, okay, didn't really open with a gap like the other two. Amazon, no gap with them. So it's really only Meta and Tesla seems to benefit, but they were really suffering. They have been really suffering. And finally, Nvidia, yeah, okay, opened with a gap higher, closed at 108, opened just under 114. So again, a little bit of a boost on that. On other news, Canada has indeed cut interest rates to 2.75. Now, this was much anticipated. The market considered this; they were going to do this anyway. But this is what they had to say about it. This is what they had to say. Why? Oh, this is what their statement they made. While economic growth has come in stronger than expected, the passive, I can't say this word, the persuasive, I got there in the end, uncertainty created by continuously changing, I think my teeth are falling out, changing US tariff threats is restraining consumers' spending and business hiring. So there they said there's a lot of strong growth. They feel they still need to cut interest rates to give the economy a bit of a boost because though things are strong and doing well, the long-term or medium to long-term uncertainty is holding back businesses and holding back consumers from spending. So that was our answer. Again, it's all about the T word. There's just simply no way of getting away from it. We can't get away from it. We can't get away from that word. Can we? We simply can't get away from it. Anyway, other things happening this week. Again, we got another inflation data coming tomorrow, which should be pretty interesting. That's US PPI, Producer Price Index. And of course, we have the UK GDP, which is, not that much, taking much of the headlines. But we'll be talked about, obviously, come Friday when it comes out. Anyway, don't forget, this is a live show. And you can ask me questions anytime you wish. Or say hi if you like. Show me your opinions. Tell me what you think. What you think is going down, or what the answer may be. It'd be interesting though, because the idea of these live shows is basically we talk together. We talk about our opinions, our ideas, and what our views are about the market, and we share those. So do remember that. And we go live every day, at least once a day. If there's big market news, of course, I'll go live more than that. But if there isn't, then obviously, I'd be once a day. But I will go live every day, once a day, to talk to you good people and have a chat. And don't forget, if you're watching me on YouTube and you're not watching the program live, you're actually watching a recording of it, then by all means, if you have a question or have a point, put it in the comment section below, okay? Because I will see the comment and I will reply to you next time I go live on air. So don't forget that as well. So you have all that choice. Okie dokie. If there is no questions, don't forget, if you watch me on YouTube and you like this sort of thing, by all means, give me one of these if you like what I do. Subscribe if you like. Hit the notification button so you know next time I'm going live. If you watch me on Twitter and you like this sort of content, you put it up with me a little bit, by all means, give me one of these. It's heart on Twitter or X, isn't it? It's not a like, it's a heart thing. Give me one of those if you like it. Or comment. Let me know you have a question or point. But anyway, if there is no questions, don't forget, these little videos are for educational purposes only, and in no way whatsoever should it ever be taken as financial advice or financial advice. Sorry, so I got a message distracting me. I'll start that bit again. Now, remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.